Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Market shows strength in the first half. Well, it's hard to believe that the first half of 2023 is now in the record books. After the dismal year in markets that was 2022, many investors were expecting a lot more of the same this year, with all the forecasts of an impending recession. However, markets usually like to trade in contrast to the consensus narrative, and the surprise was a strong market in the first half of the year, with the benchmark S&P 500 index up nearly 15% and no recession in sight. Now, the real question is, what do we do now as we look forward to the second half of the year? Is this a new bull market that will power us to new all-time highs? We are, after all, still 10% below the market peak that was reached at the beginning of last year. Or are the concerns that investors had heading into this year simply hiding in the background as speculators chase high-flying tech stocks at nosebleed valuations right before the bottom drops out? Our view is that long-term investors can stay the course, but should probably rebalance portfolios away from some of the best performing and expensive stocks and into some more defensive and cheaper assets. With investor sentiment becoming more exuberant, despite the fact that second quarter earnings estimates continue to deteriorate, there is some elevated risk that volatility will return as the summer wears on. For this week's featured insight, international investing. Most U.S.-based investors are focused on investing in the United States. And why not? It's a more familiar and therefore more comfortable investing environment, investing in companies you know. But it's also been the best place to invest, especially during the past 15 years or so. Over the past 10 years, the S&P index of U.S. stocks has outperformed the broader international equity market by roughly 15% per year. Hard to believe. If you haven't done so already, though, now might actually be a good time to start adding some international exposure to your portfolio. After such a long stretch of underperformance, international assets now provide a compelling value relative to the United States. But rather than attempting to pick individual stocks that are domiciled overseas, it likely makes more sense to use a broad-based index fund or mutual fund to provide you broad diversification, reduce risk, and limit tax headaches. You can find plenty of reasonable options online with a quick Google search. Looking ahead, growth stocks in July. Well, July has been a particularly good month for growth stocks. In fact, the tech-heavy Nasdaq index of growth companies has been higher in July for the past 15 years in a row, with a median gain of nearly 5% for the midsummer month. While this could obviously be a completely random coincidence, sometimes these types of seasonal trends have a way of embedding themselves into the market dynamic. And with that being said, once a particular trend or seasonal market anomaly becomes common knowledge, the market has a way of surprising investors by throwing a curveball. It's difficult to bet against such a strong seasonal pattern, but with growth valuations stretched and liquidity conditions tightening, perhaps the 15-year streak for growth stocks in July could be in jeopardy. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.